This is counting macros from the open market operation. It's the week of July the 5th. And the other day, I was just looking at the Wall Street Journal and I had seen an article just sort of talking about the yen, which is something that I had been following earlier this year quite closely. This sort of roped me back into it. Some sort of interesting news on the topic of the yen. Dollar yen reached a 40-year high of 162.83 on July 1st. Now it's at the time of recording, relatively unchanged at 162.48. A couple of pressures are sort of defining the dollar yen relationship at the moment, primarily the relatively expansionary fiscal policy that PM Takaichi hopes to enact. I believe already there's been some sort of expansionary spending on the defense side, as well as implementing some tax reductions. And there is sort of a common belief that the Bank of Japan is behind the curve in terms of their interest rate policy. On the United States side, the renewed tensions in the Middle East have sort of pushed yields higher as expectations about inflation change, pricing in a potential rate hike. And a general belief as well that the dollar is, as it has been, a safe haven asset during times of uncertainty. Another thing that the Wall Street Journal article mentioned that I thought was interesting was that Japanese authorities sort of expect to rely on foreign FX intervention if necessary to keep a lid on the dollar yen rate, which reminded me of something that happened earlier this year, actually in January, when the New York Fed conducted a rate check on the yen back when the upper bound was around like 160. So what I noticed a lot and what people would generally see is that the dollar yen rate would trend towards 160 and then rebound back to maybe 155 and then slowly go back to 160 as the same factors that I had mentioned before were pushing that up and depreciating the yen against the dollar, and then suddenly would fall back down. There was sort of a cap put on that exchange rate. And now that we're seeing consistently the yen being 162 to the dollar, that sort of ceiling, that upper bound might be closer to 165. The reason that I find Japan kind of curious is the sort of the GDP ratio that they've got going on above 200%, and their current fiscal policy outlook, especially with sort of the AI build out that's bolstering the East Asian economies. I was thinking about the debt to GDP ratio and I wanted to do a bit more digging. So I found some things that maybe make that picture a little less bleak. I learned that almost 90% of Japanese government debt is held domestically, which sort of insulates Japan from volatile foreign sentiment about the country's economy. I immediately sort of contrasted that in my mind with America. Saudi Arabia, they own a lot of U.S. government debt. China owns a lot of U.S. government debt. So, the U.S. is very exposed to, I guess, foreign sentiment changing. And another thing that I guess I had known, but I didn't really connect the dots on, is how low the Japanese policy rate has been for like the past 3 decades. That means that although the Japanese government's running deficits a lot of the time, their financing rate's super low. It's, near zero or near 1%. And I think the most interesting thing that I found out was how the Japanese government holds a very large amount of financial assets, particularly in their stock market, and how that gives them returns given the sort of debt service rate that they have. So they're borrowing at super low cost and then essentially investing those loans that they're taking on into far higher yielding investments in the financial markets, which I found interesting. And that gross debt shrinks down to what the source called consolidated debt. So it goes from around over 200% GDP to only around 78% of their GDP, which I found incredibly interesting given how, as I said before, the prime minister hopes to be a little bit more expansionary with their fiscal policy and given the prominence of AI build out and et cetera, et cetera.